there were a couple of hard years where I never took my eye off the ball, but I financially was ruined again. There was one point where I was all invested in one project, which again is a massive lesson, right? You never put all your eggs in one basket. It basically became illiquid, and I was having to borrow money for rent.
Right.
It's like one of these stories that you hear, and it's a bit cliche, but it happened, and it was a little bit scary. I could always go home to England and live with my mum and dad.
Hi there, and welcome to another episode of The People of Private Capital with me, Ferdinand Roberts. I'm the CEO and founder of Asset Class. We're a provider of front, middle, and back office solutions to the private equity, venture capital, and broader private capital space. So whether you're looking at fundraising, managing your investors more effectively, providing them with a full feature LP portal on the back end, or indeed managing your deal flow or portfolio management, please come and talk to us. We'd be delighted to help. Today, I'm speaking with James McDowall. James is a founding partner at Arcanum Capital. Arcanum Capital are focused on the broader Web3 crypto space, typically investing in the seed, very early stage investors. And today, I speak with James about his journey into that space, coming from a professional sports background, having participated in the PGA for about 7 years in both the UK and in Zurich, Switzerland. Moving then into the venture capital space and his focus on blockchain and everything Web3. It's a really interesting conversation. I hope you enjoy it. And with that, let's dive into this week's episode of The People of Private Capital. Okay, James. Well, welcome to the podcast. It's a real pleasure to have you here. I know we tried on a couple of occasions between your international travel and various other things. We didn't make it happen, but delighted to have you here this morning. And welcome to The People of Private Capital.
Thanks very much for having me, Ferdi, and appreciate your patience with getting me on.
No problem at all. No problem at all. So, James, as I said in the introduction there, you're founding partner at Arcanum Capital. And just for our listeners, can you give a brief introduction to the firm and perhaps your area of focus?
Yeah, so Arcanum Capital was incepted in the year 2020. So we've been around for about 4 years now. And we typically invest in early stage Web3, blockchain and digital assets startups. So pre-seed and seed stage. Sometimes even the first check-in. We sometimes we like being first check-in if it's a strong founder we've worked with in the past, or a strong introduction to a good team. We're happy to sort of lead.
Right. Yeah. Well, there's certainly a tremendous amount happening there right now. We might delve into that here in a few moments. But just before we delve into, let's say, some of the sample portcos that you're backing, perhaps your investment thesis, a little bit about yourself. So, doing the background, you've got a pretty varied history here, or should I say, moving from the sports world into venture capital. Some might say there's a lot of direct comparisons in terms of the competitiveness and the endurance that's required, and perhaps the diligence that you've got to put into to honing your craft. But interested to understand a little bit about your journey, and maybe perhaps we could pick up from your college days, or maybe even prior to that, anything that might have influenced your movement into the sports world first of all, and then perhaps take the story from there.
Good. Yeah. So it has been a big career change. I was a golf pro.
Yeah.
Before now. That sort of came to an end in 2017, 2018.
Yeah.
So if we go back to sort of school days, I guess at that age, it's quite common that you don't really know what you want to do. Right.
Mm-hmm. Yeah.
And I found golf when I was maybe 14, 15 years old.
Right.
And quickly became, it's something that I wanted to do all the time, and my parents were quite good at getting me to try different things. And I was playing tennis at the time, musical instruments, tried a lot, and just most of the time I just didn't apply myself. It never really grabbed me, and I didn't practice enough. Or then golf came along, and I became really sort of obsessed with it, and I wanted to play every day. It's all I wanted to do. As soon as I finished school, I wanted to go to the golf course, and got a little bit addicted. So fast forward a few years to sort of coming out. I did do what we call A levels in the UK. So I didn't go off to college and do an apprenticeship. I stayed on at school and did an extra couple of years. Studied English, history, psychology, and politics.
Right.
They seemed sort of the most interesting to me at the time. And then when you finish that, it's a question of what do you do? Do you go straight into carry on education, go to university? And there were quite a lot of people who sort of took a year out to find themselves or figure out what the hell they want to do, or what they want to study. And at the time, all I wanted to do was play golf, and I thought by this point I had a shot at turning pro. I was improving rapidly. I won the most improved junior at the club in that year.
Right.
And so I took a year out and I worked at a golf course, and I played golf pretty much every day, and I practiced, until my hands got very sore. And ended up turning pro at the age of 19, and went to work at a different golf club, and quickly found out that professional golf is extremely competitive. I think starting at the age of 14, 15, I was always playing catch up. Coaching is something that is quite heavily pushed once you turn pro and you do your sort of PGA qualifications.
Right.
So I did all the coaching qualifications, and coaching is something that I really enjoyed.
Right.
I figured out I wasn't good enough to play for a living. It's ultra competitive. And I played in some professional tournaments around the region, and even abroad, a few pro-ams and things, which I enjoyed. But I wasn't going to make it as a player.
Right.
So I went down the coaching route, and I then moved again to a driving range, probably the best one in the region, one of the best in the region. And my coaching diary became full very quickly, and I developed personal skills and became one of the most popular coaches in the region. I would say I was completely full diary. And then I sort of felt like I was maxing out there. My diary was full. Where'd you go from there?
Right.
And there was another British pro who was a friend of a friend, and he'd been out in Switzerland for many years. And he happened to be back visiting friends and family at Christmas one time, and I got to know him, and he said he might be looking for someone to go and work out there with him. And it was good timing for me, because I was at that age and that stage in my life where I wanted to broaden my horizons and look for other opportunities. I didn't want to just be in Derbyshire coaching golf for the rest of my life. And then that happened. I got a call off him or a message one day, and he said, "Yep, I mentioned it, and we now definitely need someone. Come out and take a look." And then it all happened very quickly. It was a case of sort of go out there 2-3 days, stayed with him, and he needed an answer by the Monday.
Right.
We started to look at where I was going to live and everything. It was like, yeah. And I did it. I just come out of a relationship, and it was a great opportunity. And I knew I was going to meet some very interesting people. And so I did it. So that was, what year was that? That must have been 2017.
Right.
So I was 27 by that point. So I'd done a few years as a pro and sort of a lot of experience. So I moved out to Switzerland, and I moved to an amazing place called Engelberg, which is a mountain resort in the Alps, and it was absolutely stunning. And I was working at 3 different courses. There's Engelberg Golf Course, and there's a big resort owned by, I think, a Qatari family. They put like $1 billion into it. It was really prestigious. And so that was very interesting. It's called the Bergenstock Resort, overlooking Lake Lucerne. And there was another sort of beginner course down the road. And I quickly picked up some very interesting clients. I actually got probably Switzerland's biggest pop star as a client, and it sort of taught him and his whole family to play golf, and they were spending a lot of time with me. I would travel with them. I'd go to America with them and play golf with them. And there was actually a royal family as well, which they were a very interesting client as well, without going into details. So with these two sort of major clients, I was spending a lot of time with them, and I was earning decent money, and I didn't really know what to do with it, and so I became very interested in investing,
right?
Because again,
just
the
as
golf
an angel
side,
investor, or in your own.
Yes, not at that level at the start.
Right.
I was looking, rather than having this money sat in the bank or spending it on rubbish that I didn't need.
Yeah.
I wanted to invest it.
Right.
And stocks didn't really excite me, because that just seemed like what everyone did, and they didn't seem, although in hindsight they didn't see much value there at the time. I wanted something cutting edge, and I found Bitcoin and Ethereum.
Yeah.
And that turned out to be good timing. It seemed like a very interesting emerging technology.
So this was 2018, kind of 2019.
Yeah, I think Bitcoin was at maybe, I think $1,600 or $1,800, and Ethereum was down at like $200 or $400.
Yeah,
So
it was early days for Ethereum.
It was early, and then the 12 months after sort of putting money into those were crazy. We got that whole euphoria bubble, like tulip mania.
Yeah.
So I made some good money there. I started to look down at lower market cap opportunities as well.
Yeah.
And that is when I found myself wanting to help the teams, help the projects, do advisory and consultancy. And I was meeting a lot of very, very technically amazing geniuses who were struggling to bridge the gap between their technology and normal people and communities and consumers.
Yeah.
And so I found myself thinking, these guys are incredible. The technology is incredible. This is a real use case, but they're missing here. Maybe the website, it looks terrible, or maybe they're struggling to, just do like basic marketing.
Yeah.
And so I started to do that. And then I met my now partners that I set Arcanum up with. There was 4 of us initially.
Yeah.
And we were sort of incubating projects together, investing together, and helping teams, working with teams. And after a while, by 2020, we realized that we were doing what all good VCs do: investing early, communicating with the teams, helping them, making introductions, helping them onboard validators, creating partnerships, helping with marketing strategy, branding, all of this stuff.
Yeah.
And by this time, I was out of golf. I did well enough with the initial investments in 2017 to not have to give golf lessons anymore, which was nice. And I could really throw myself into this industry.
Yeah.
I spent a lot of time traveling, going to conferences, and meeting sort of the biggest and brightest names in the space, and learning from them, and building a really strong network.
Yeah.
I also, during that time, I lost a lot of money, which I think is very important for all investors to do, because when you make a lot of money initially, it is luck, and you get addicted to the rewards, and you also think you're a genius.
Right.
When in hindsight, you realize a lot of it was luck. You had no idea about market cycles. And the psychology in the market cycles, which is very important. And so there were a couple of hard years where I never took my eye off the ball, but I financially was ruined again. There was one point where I was all invested in one project, which again is a massive lesson, right? You never put all your eggs in one basket. It basically became illiquid, and I was having to borrow money for rent.
Right.
And it's like one of these stories that you hear, and it's a bit cliche, but it happened, and it was a little bit scary. I could always go home to England and live with my mum and dad, but you think, oh God, I've made all this money and I've all got all this experience now, but I'm broke again.
Yeah.
So, but they were valuable lessons, absolutely invaluable, really. Like, it really teaches you about the market sentiment and the mistakes not to make going forward, diversification.
Yeah.
And I also had to get a job, which was a blessing in disguise, because I went and did a period with an asset manager in Zurich.
All right.
Tavis Digital, which was a sort of spin-off from Tavis Capital.
Right.
I think at the time they were managing about 1 to 1.5 billion francs of pension fund money.
Right.
So very, very strong institutional finance. And they quickly whipped me into shape. They say, this is not the real world. This is how we do things. And I had to deal with like really top tier Swiss service providers.
Yeah.
And I helped them structure some financial products in crypto because I understood the technology, the emerging sort of trends. And we launched some products with them. And that was really bridged the gap between this crazy Wild West crypto world and proper institutional finance.
Yeah. And you weren't tempted to lean on the golf again as an easier way to make money in the post
almost
getting burnt.
Almost.
Yeah.
It was tempting to go back to coaching, and honestly, I did try. There was one place who were looking for a pro, and I thought, I could just go back,
slot in there, yeah.
But I didn't. I saw it through. I started working with this asset manager, and like I say, that was one of the best things I did. I also studied CAIA, Chartered Alternative Investment Analysis. It's a charter in finance, like the CFA, the Chartered Financial Analyst.
Yeah.
And I did CAIA because I was certainly in alternative assets rather than the traditional stocks and bonds and stuff. Digital assets and Web3 and all these sort of early stage investments that are into alternative assets.
Yeah.
So that was good, and that was all about portfolio management and diversification and properly managing a portfolio, which I applied to the Tavis Digital stuff.
Yeah.
And so after all of this, all this experience making money, losing money, managing my own assets, managing assets for this proper asset manager, I then felt ready with my partners and what we've done in the past to launch Arcanum Capital.
Yeah.
And so quite a crazy journey, really.
Yeah, yeah. So that discipline of portfolio management, kind of reverse engineering that to I'm assuming help influence your decision making now as you look at potential investments and spreading that risk. And you're quite right. I mean, I think it is cliched. Anybody who achieves any kind of success has normally a series of failures, not just one, but a number of them that help hone the skills. I mean, it's no different, I guess, to, I'm sure you could draw your own golf analogies to it, but that, those changes that you're making, realizing, well, that's not working. I won't do that again. It is cliched, but you do learn so much from those failures. And it's, it's challenging, I think, at a time, if you're in your, mid 20s, late 20s, even, that's a tough time to kind of swallow your pride and say, like, I failed, but in a sense that also gives you the energy that you need to take that next step and move forward. So how did you cross paths then with your fellow founders of Arcanum? How did that come about?
Yeah, so two of them went to Draper University, as in Tim Draper.
Yep.
Lucky enough to have Tim Draper as an LP in the first fund, actually.
Wow.
That's
really, a pretty
really
good thumbs up, yeah.
Yeah, so Raoul and Lu Chang. Lu Chang is between Beijing and the Bay Area in the States. And Raoul is between, he grew up in the States, but his parents are from India, and he resides in India now. So, very globally distributed team.
Yeah.
But I met them just through, I met Raoul. We were some of the first people in the Cosmos ecosystem, helping teams there. So projects like Comdex and Persistence and Sentinel, and we were, helping teams that were sort of the first there in the early days building in the Cosmos ecosystem.
Right.
Cosmos is very interesting because it's like an internet of blockchains.
Right.
And they can all communicate with each other, and you can do like cross-chain transactions. This was really cutting-edge stuff back in 2018.
Yeah.
Because you've got the sort of monolithic blockchains like Bitcoin and Ethereum, but they can't communicate with each other.
Yeah.
And Cosmos was doing some really cool stuff. And it also, for microtransactions, we know that Bitcoin and Ethereum can get very expensive.
Yeah.
But when you start looking at, let's say, Sentinel, for example, a decentralized VPN, lots and lots of tiny microtransactions, really lots of them.
Yeah.
You can't do that on Ethereum. It's impossible. And so the Cosmos technology and the Cosmos SDK allowed these microtransactions and interoperability. And so that was really cool stuff that fascinated me. And so, I guess I met Raul in the Cosmos ecosystem, and then he knew Lu Chang from Draper University.
Right.
And Karthik is a childhood friend of Raul as well. And Karthik and Raul have been in blockchain and crypto since way back, sort of mining Bitcoin back in the early days, sort of thing. So I was the last one to come in 2017. I think Lu Chang had been exposed to Bitcoin since maybe 2015 because of Draper Uni, and Tim Draper was a real sort of proponent of Bitcoin back in the day.
Yeah.
So I learned a lot from these guys, and we seem to gel very well and want to help teams together.
Yeah. Well, for our listeners, for anybody who's maybe not directly familiar with Web3, crypto, they've heard these expressions, may have a kind of a broad understanding of what they mean. Can we maybe just level set on? I mean, it's called Web3 because it's being generally accepted as kind of the third wave of the internet. The first being more kind of online brochures, the second being more kind of centralized or commerce driven and what have you, and then Web3 being this kind of decentralized, blockchain driven internet. What is it that excites you about that model? And is your focus more on let's say the applications of blockchain than it is necessarily on the, let's say, the crypto side of the equation?
I think as an overarching theme, decentralization is very important for humanity.
Yeah.
I think we are seeing these massively centralized oligopolies, whether it's big tech, big pharma, big finance, and they just get bigger and bigger and bigger and more and more and more powerful. And you've got the antitrust laws in the States, but do they do enough? And we're getting to a point where, one or two companies own everyone's data, and they sell it, and they just have so much power and control. And I don't even think it's malicious intent from the onset. It's almost like how the incentives work with the private companies, or they become public companies and they have shareholders and they have directors, and they just have to keep growing. And the entire financial system, it relies on constant growth and growth and growth. And so these big companies have to keep getting bigger and bigger and bigger and acquiring the smaller companies, competitors. And so they just become enormous, and everything becomes very, very centralized. And what I saw in Web3 is people can own their own data. They can transact peer-to-peer without a massive rent-seeking third party in the middle. Whether it's a financial transaction, whether it's a data transaction. And I just see things going in a way that needs to be disrupted and more democratized and decentralized. So as an overarching theme that I agree with, yes. But it also unlocks a lot of technological possibilities. So, I mean, if we talk about one of our portfolio companies, talk about LucidDAO. LucidDAO is a lot of our companies, we call them companies, but they're actually DAOs. DAO stands for Decentralized Autonomous Organization. And a DAO is a more like a group, and governance is very distributed. And they usually run on proof of stake networks where you hold a stake in the it's without using the word company. You hold a stake in the network, and that can be in the form of tokens. But then you can vote, and so major decisions from the DAO get proposed on chain, and then everyone who holds a stake in the network can vote proportionate to their stake.
Right.
That's basically what a DAO is. Now, LucidDAO have created something really cool called Alter. That's ALTR.trade is the website.
Yeah.
And what they're doing is they're using NFT technology to basically put collectibles on chain. And so let's say you've got this allows for multiple different applications. So let's say you've got a collectible Ferrari, an old F40, and it's worth 4 million euros.
Yeah.
It's a lot easier to find multiple buyers than one buyer. And you can actually generate a liquidity premium as well. So if you can fractionalize ownership of these extremely expensive collectibles, that's quite a novel concept.
Right.
Another thing is, imagine if you're a collector and you've got $10 million worth of collectible watches, bespoke watches, and you want to release some of that liquidity. There is no bank in the world that has the expertise to value these watches. There's no one that's going to take it from you and say, yes, okay, we'll use this as collateral, it's worth X amount, and we'll give you this liquidity. So what Alter allows is not only fractional ownership of collectibles, but also it allows a collector to put their collection or part of their collection up as collateral, and then you can borrow against that, and the liquidity is provided by the community. And so it's a very democratized model of allowing...
So the community is purchasing tokens in that basically NFTs as a fractional ownership of that collectible.
They can do, They can own a percentage of. There was actually that example I used, the Ferrari F40 of 4 million euros worth. That was sold on the platform already.
Wow.
The funny thing is, it went to one owner. It didn't really prove the concept, but it was fractionalized, and you could have bought a share in that.
But there is a thinking being that it's an appreciating asset, and so your tokens have the opportunity to appreciate. And
there's a big theme in Web3 right now. We call it RWA, real world assets, and collectibles is certainly one of these. This is an asset class, whether it's a collectible Rolex or a Ferrari or a classic car. This is an asset class, and they're actually going to go into wine as well. So wine collections. So there's a network of oracles that are there that value these things. Like I said, a bank couldn't really do it; they don't have the expertise. But with LucidDAO and Alter, there's a network of oracles. Monaco Legends Group is one that springs to mind.
Right.
And they all have to sort of review the items and value them, make sure that they're authentic. Because there's obviously a big problem with fakes. But that's been mitigated by this Oracle network.
Right.
Yeah. So that's one application of blockchain that we think is very novel, and it just unlocks a lot of possibilities in that particular asset class.
Yeah. I mean, it certainly seems it's becoming more popular in commercial real estate, to tokenize and ultimately give that more for the purposes, I guess, of secondary market liquidity. So, with, as you say, the alternative asset class, it tends to be, or historically at least, pretty illiquid. You're investing for the long term, or medium to long term, let's say 5 to 7 years or maybe longer. But tokenizing and some of the legislative changes that have happened around that, giving secondary markets the opportunity to take those tokens, and perhaps for investors who might not be able to traditionally invest in that asset class, being able to participate through those secondary market token exchanges.
That's right.
Which is super interesting. Yeah,
that's something we're actually doing with our second fund.
Right. Okay.
So Fund 1 is a pretty normal venture capital fund. Raised $12 million, 44 companies. Where that fund's doing really well, has some really good projects in there. Lots of launches coming up this year.
Nice.
But Fund 2 will be a slightly higher raise, so we're going to go for $50 million. But the cool thing about this fund, it's one of the first in the world that will be tokenized.
Right.
And so why would you want to tokenize a venture capital fund? Well, if if you're an investor in the venture capital fund, your money is pretty much locked up, right? There aren't really redemptions. We can't just give you your money back because it's invested in companies who are building startups.
Yeah.
They can't really give the money back because it's in their treasury, it's being used. So venture capital has always been illiquid.
Mm-hmm.
But imagine if you could tokenize the fund and there was a secondary market, and one of our directors, Lawrence Newhook, he's an absolute veteran in traditional finance, and he's in this space now.
Mm-hmm.
And he's orchestrated a lot of this sort of tokenization of the funds. He has a fund platform in Bermuda that we are on,
Right.
and he's slowly tokenizing all of these funds.
Yeah.
He comes from the pension fund world. He's worked at Point 72, and he envisages a world where pension funds can simply rebalance their alternatives portfolios. So let's say they're slightly up, and there's been markups because of subsequent round of financing in the portfolio. Maybe there's some that are liquid, but they can't just get a distribution or a redemption.
Yeah.
But they could sell their position based on all the information that is public at a premium on a secondary market.
Yeah.
And the cool thing is, it's not just a token that represents the economics in the fund. It would have everything coded into the smart contract.
Right.
So all of the accredited investor sort of, there's a lot of there's a lot of regulation in private capital. So imagine if you could go on as an investor and you get whitelisted, you've done all your KYC or your AML, you're an accredited investor, you've proven that.
Yeah.
Well, suddenly you're free to purchase all these tokens that match the criteria, whether it's jurisdictional, whether it's being an accredited investor in a certain jurisdiction. All of that will be coded into the token, and you will only see the investments that you're eligible to buy into.
Yeah.
And so that is, if you look at traditional finance and how archaic it is with transfer agents and share slips and all of this stuff, it really is going to be completely revolutionized.
Yeah.
With blockchain and tokens.
Yeah, it is. It's exciting. I mean, I think one of the observations I'd make, just having looked at this ourselves, is that the legislation, in the US, for example, the SEC, kind of keeping pace with the technological capabilities. I mean, in some respects, I see the companies that are capable of doing it just not either gaining as much traction as they should, because there's still an opaqueness around the legislation. And if the regulators could kind of keep pace with that, or be a little bit more open with it, the rate of change would be that much quicker. How do you find that as you look at kind of your investment landscape? Is that something you're seeing?
Yeah, there's a big sort of phrase in our space, and that is regulation follows innovation.
Mm-hmm.
And there's like first through the door gets shot.
Yeah.
And the regulators are understandably slow to move because there is a hell of a lot going on, and they are obviously conservative. They don't just want to roll out legislation at the jerk of a knee. That could really affect things. And we do tend to think in our industry that the SEC do lack transparency. They tend to go after people, and everyone's scared of the SEC. Most startups in our sector are scared to be in America, full stop. There are jurisdictions, if we use Switzerland for an example, and FINMA, much more transparent, much more willing to communicate, although they're a little slow. But you will have a better time as a startup incorporating a foundation in Switzerland, trying to get FINMA regulated, than the SEC, who, according to a lot of the founders we work with, can be extremely difficult to deal with. They don't really give much guidance. They won't really tell you what to avoid until it's too late. And so they're ultimately scaring off a lot of talent. And the companies would rather be incorporated in, if you move around, actually. What I've seen since 2018, Malta was a hot spot, and then that all became a little bit shady, and people didn't want to be there because of bad reputation. And then there was the BVI, and then the BVI sort of clamped down because it became a little bit too easy, and a few scams and things. But it's a very fast-moving space.
Yeah.
Singapore is a good jurisdiction,
Right.
very sort of digital asset friendly. And where we are, Bermuda, has a great reputation as the insurance capital of the world,
Right.
but they're also very digital asset friendly. The Premier of Bermuda is sort of pro digital assets, and they have this new DABA license. So Coinbase and Kraken, two of the largest exchanges in the world for digital assets, are setting up in Bermuda.
Yeah.
Under this license. Our asset management company, Arcanum Capital ISA, we're domiciled in Bermuda.
Right.
And Lawrence is in Bermuda. And we're sort of registered with the regulators. All the funds that we manage are all fully approved by the regulators in Bermuda.
Yeah.
And this gives institutional investors a lot of comfort, because we are regulated. They're looking at us, they know what we're doing, they know where the money's going to and from, and nothing's going to disappear like it does in maybe places like Panama or, Cayman have the microscope on them, because there's, a lot of stuff that goes down there.
Yeah.
So yeah, there's a lot of musical chairs when it comes to geography in this space, because by nature it is just so decentralized, and you can launch a startup from anywhere in the world now.
Yeah. It is crazy. I mean, I know Coinbase has been a pretty well publicized example of the challenges. I mean, that constant questioning of the regulators as to how should they be operating, actually calling for regulation, and not getting the response it was expecting, and as a result, I guess, looking elsewhere, I know they looked at a number of different geographies for that. But it's interesting, and I wonder to what extent the movement of stories like FTX, Binance, etc., moving from the financial pages to the front pages, how that affects your view, maybe your LP's view of the space. Is it more challenging when you see? I mean, it is a lot. There's a lot of hype and perhaps misunderstanding of what's going on there, or what's gone on there in the space. Is that how do you find that affecting your let's say ability to raise, or indeed questions from your existing LP base?
Yeah, FTX was a complete mess, and I think that was due to the lack of oversight in the Bahamas, where they were domiciled. That they were letting these companies just start up there, and there wasn't really strong enough regulation or oversight. And when you're dealing with those amounts of money, you have to be heavily regulated and inspected and make sure that you're doing things properly.
Yeah.
So that that unwound, and that affected the entire industry and has created trust issues. Yeah.
Yeah.
I think a big catalyst for us now is the Bitcoin and Ethereum ETFs.
Yeah.
Which have been approved and launched. And I think even the most conservative of family offices are starting to think we can't ignore this asset class any longer. But before, it was very niche and a bit shady, and is this real? Is it a bubble? Is it going to disappear? Is it going to blow up? Now it really is becoming obvious that it's here to stay.
Yeah.
These are some of the best performing ETFs ever launched, and they're attracting a hell of a lot of capital.
Yeah. I think BlackRock said it was the fastest to $1 billion in history on the original Bitcoin ETF. Yeah.
Yeah, and there's questions around entire fiat currencies themselves, even the US dollar. It's the world reserve currency, and there's questions around that with BRICS and people trying to move away from the dollar slowly but surely.
Yeah.
And so where do you park your value? How do you store value? There's obviously gold, but when there's this thing that looks like digital gold, and it's performing better than gold, and it's easy to custody and insure and transport and move peer to peer, all of a sudden it becomes impossible to ignore, and that's what Bitcoin is. And then once you've taken the orange pill, as we call it, once you've had your Bitcoin moment, that opens up all sorts of doors, because you realize that this is not just about currency. This is about the entire internet. This is about decentralizing everything. And there are just so many possibilities.
Yeah, well, I think that institutional backing, if you will, of the space is important, it's not to, it's partly to legitimize it and make it more appealing to, to the capital allocators that are backing most of what's happening in certainly in venture capital and private equity, the companies that help the world move. So I think the ETFs, that's a big step forward. Great to see that kind of as I say, legitimizing of the space. When you look at let's say the next 5 years or so, James, what's kind of most exciting to you about where this is either going or things that you're seeing right now that are emerging as trends? Just kind of looking at it a little bit. How would you characterize that? What's exciting for you?
I do think that our job is going to get harder. I think that regulation is coming, and I think it's going to be tough. And I think it will ultimately stifle a lot of the innovation that is happening. And that said, I think there will be jurisdictions that offer this sort of sandbox environment and realize that not everyone is trying to launder money or to scam people, and that there is genuine, fantastic innovation happening. So to answer your question, the good things that are happening, with all this capital coming into the sector, we should start to see a lot of products really go mainstream and start to disrupt the big oligopolies.
Yeah,
and that's what we're excited about. So one of our portfolio companies, a company called Verse, is trying to disrupt TikTok.
Right.
So it's a short video platform.
Yeah.
But instead of, you've seen all the TikTok controversy, right?
Yeah.
This is being branded as a national security threat in places like even America.
Yeah, the US.
I believe it's banned in India.
Mm-hmm.
Verse has, we're the only investor in Verse.
Wow.
Has over 1 million downloads and I think over 500,000 daily active users now. So it's very sticky. It's very addictive. There's a whole lot of people in India using it.
Right.
TikTok is not in India, so they've already got that entire market. It's hit number 1 in the UAE App Store twice now, I believe, and this is growing it's actually growing at the same pace as TikTok did.
Wow.
At the beginning. And so what Verse is going to do is bridging the gap between Web 2 and Web 3. So there probably will be a token involved, also a point system. But if you look at TikTok, if you're a content creator on TikTok, you don't really get rewarded. The platform sells advertising space, and you can take this as any social media platform in existence. You are the product.
Yeah.
You might get free things and you might get deals with brands as an influencer, but you're not getting anything from the platform. The platform are using you to bring people, and then they're selling advertising space.
Yeah.
Whereas with these more democratized, decentralized social media platforms, all of the social graphs can be on-chain. There can be point systems. There can be AI as well that can sort of track virality. If something goes viral, you've created a trend. The platform actually has the ability to track that and reward you and give you points. And so we're really excited about these platforms starting to be taken seriously by the mainstream, and actually now we will start to see real disruption. So I think if we look 5 years ahead, it's been so niche until now, although we feel like we've been building stuff since 2018. We don't have mass adoption yet, but I think the next 3 to 5 years we will definitely start to see true disruption. Whether it be, if you look at Chrome and Safari, and the sort of monopoly they have on all the data and your browsing history and everything. We have a browser in our portfolio called Santa, because it gives you gifts, but it actually pays you to browse. So rather than Google selling advertising space, you get shown adverts if you've got them switched on, and you'll get paid in crypto for browsing.
Wow.
Also, if you go and shop on Amazon through Santa, you actually get Santa can strike a deal with Amazon and that you can get cash back if you purchase things on Amazon through Santa.
Yeah.
There's lots and lots of novel possibilities with decentralizing and democratizing all of this stuff from web browsers to social media, the financial system in its entirety.
Yeah.
Peer to peer transaction, things like communication. You send someone a message on WhatsApp. That's very centralized. All of that data, again, it's all the same company, right? It's Meta. They've got Facebook, Instagram, WhatsApp. All of this data, they own it, and it's unfathomable. So lots and lots of disruption to happen, and we should see that over the next 3 to 5 years.
Yeah, it is. It is fascinating. I'm actually reading a book at the moment from Chris Dixon from A16Z called Read, Write, Own, and it's kind of about that that shift, across from Web 1 to 2 to 3, and that really describes what you're just describing there, which is you own the data, you've got the ability to monetize it in a diametrically opposed way to the FANG stocks right now, the way that they monetize it almost 100%. YouTube is probably one of the few exceptions, but yeah, so it will be fascinating to watch, and doubtless there are incentives there. I mean, where I guess the network design and the incentives in that network kind of affect the outcome, right? They drive the outcome, and so it will be interesting to see those incentives kind of come to the edges of the network, to the people who are interacting with it, and seeing what comes of that. But content obviously being a key driver. So, well, good luck with that. That sounds like an interesting one. So, Verse is the name of the company, is it?
Yeah, Verse. VURSE. Yeah.
VURSE. Okay, I've got to check that out. Okay, well, just kind of, we're coming into wrapping up here, James. How can people learn more about Arcanum Capital and maybe connect with you if they'd like to know more about you guys, the Portcos that you're investing in, and indeed this second fund that you've got?
Yep. So I guess website's an obvious one. So Arcanum.capital.
Okay.
That's ARCANUM.capital.
Great.
We're quite active on X, formerly known as Twitter.
Yeah.
So the handle is simply Arcanum Capital. So x.com/Arcanum Capital.
Great. Yeah.
They're probably the main two. I'm on LinkedIn. Yeah. LinkedIn, my inbox on LinkedIn is a bit of a black hole. I get so many messages. I have about 15,000 connections on LinkedIn, and I just get so many messages that I don't even open it half the time.
It becomes unusable.
Yeah.
But if they connect with you, you can kind of or follow you, at least be passively aware of what you guys are doing.
Yeah. X is good. We very often repost portfolio highlights. The website, we always keep the portfolio very updated. So if a new company comes in, it's on there, and then you can just click through and go through to their website.
Yeah.
If you'd like any information on Fund 1 or Fund 2, indeed, you can email info@arcanum.capital.
Okay.
That'll come through to me anyway. Yeah. And we can send out, you could look at our maybe previous reports.
Yeah.
We're very, very passionate about reporting. So we catch up with every single portfolio company every quarter, and we put updates and plans for the next quarter. Really, really hot on reporting.
Yeah.
So you might want to view those.
Great.
Yeah. And we've got data rooms with all of that stuff in. Yeah.
Yeah.
But I should say that we can only speak to accredited investors.
Yeah.
So this is not open for retail investors. Like I say, we're regulated, and we have to do a lot of due diligence on our investors.
Yeah.
So we only really deal with accredited and institutional investors.
Yeah. Perfect. And in terms of your LP base, is it predominantly European? Is it European, US?
It's global, really.
Right. Okay.
We do have some high net worths. Tim Draper, I mentioned, through Draper University Ventures. We have Sandeep Nailwal, founder of Polygon. He's one of our LPs.
Right.
Polygon Ventures.
Yeah.
some high net worths that made a lot of money in the last sort of crypto cycle and wanted to diversify more into, private markets.
Yeah.
And lock that capital away and let it grow over the bear market rather than holding liquid stuff that's just going to get destroyed.
Yeah.
So yeah, some high net worth. Tavis Digital kindly supported us. Their due diligence was exceptionally difficult to get through with them, being with their pension money background. They asked a lot of questions and we managed to satisfy their criteria. So that was good.
Yeah.
So yeah, it really does vary. We do take LPs from the States. We have a feeder fund, so
Right.
It's all set up for global capital really.
Yeah.
Some European, some States, UAE, and some from India as well. With us having boots on the ground in India, we get a lot of the best deals from India.
Yeah.
And that interests Indian investors.
Yeah, a lot of
So
family
it's really
office
global.
activity out of India right now.
Yeah, it's a big emerging economy, and what we saw back with Fund One is, there's a lot of talent coming out. Kids coming out of uni and wanting to be blockchain developers. They're actually studying, coding at university, and they can, create blockchains. And
Yeah.
you're not really seeing that as much in the West.
Right.
So it's a big emerging economy. Yes.
Yeah. Well, very good. Well, we wish you nothing but the best for Fund 2. It sounds like you've got some really interesting portcos in Fund 1, and I'm sure we'll continue to support those. James, it's been a pleasure chatting to you today. I'm glad we finally connected and could make this happen. But for today on the People of Private Capital podcast, James, thanks very much. Wish you the very best.
Yeah, thanks very much for having me, Ferdi. It was great to talk.
Great. Thanks, James.